Mr. Aamar Singh, Senior Vice President of Research at Angel One. Aamar, thank you for joining us here on News 9. I mean, tremendous recovery that we have seen in the past 3-4 sessions. On Monday, we saw a big 280 point swing, followed by follow-on buying on Tuesday. I mean, safe to say that the worst is over, or do you think that this recovery is just that, a dead cat bounce?
Yeah, I would say, if you ask me, I wouldn't say it's a dead cat bounce, but yes, one thing is very clear that we are seeing consolidation in the markets, and markets are pricing in the various scenarios which could play out post the election results. So that is very clear. And also, if we look at the India VIX, so that also continues to remain at elevated levels. So anything above 16, 18 is, I would say, cause of concern. And currently it's around 20 plus, which is, I would say, the highest level since October 22. So what that tells me is that markets have factored in, but yes, markets at the same time are cautious. Also, if you look at the FIIs, the selling has been continuing. So markets, and also I would say the smart money investors, they are all looking at basically keeping a close watch and having light positions as compared to really going all out. And if you ask me, technically, markets are clearly displaying that it's a sideways and consolidation zone. If you ask me about Nifty on the upside, 22,300, 22,400, that's a zone of resistance. Downside, now one thing is very clear that 21,700, 800 is very crucial support zone. If that is taken out in any way for whatever be the reasons, it could be domestic, it could be international, then we could witness some real sharp correction in the markets. Otherwise, we could see some consolidation. Also, the heavyweights are more or less, I would say, mixed. So in terms of, I would say, Reliance, in terms of IT stocks, in terms of banking stocks, HDFC, ICICI. So we are seeing mixed trends there. That's the reason we are seeing this sort of consolidation. Also, advances are comparatively better placed as compared to declines today. So, but that's too early to read into it. But overall, I would say higher levels would be sold into the markets.
All right, and sir, one of the points that you made, FIIs have been selling incessantly. They have pulled out close to $3 billion worth of equity from Indian markets between May 3 and May 14th actually. Whereas DII, your domestic institutional buyers, have pretty much offset all the exodus of foreign moolah that we saw. What explains that? What's giving them confidence? What's giving confidence to our mutual fund industry that, the long-term story of India, election aside, is still going to be, strong?
So we have to understand that FIIs, I have not said they are fair weather friends, but they definitely look at opportunities across the globe. So because they are spread out across the globe, they have access to hundreds of markets across the globe. So they'll look out at all the opportunities which are there, because ultimately it's the investors' money which they are really looking at. So they'll see where they can generate better alpha as compared to India. And China definitely seems to be a better bet for many of the FIIs, given the way Chinese markets have cracked. So that's definitely helping them. And as far as our domestic institutions are concerned, they have nowhere else to go but the Indian markets. So they have to stay invested. If you look at mutual funds, as per regulations also, they can't sit on cash. So they'll have to stay invested. So having said that, they'll definitely look at investing in stocks where you see a lot of opportunity. And at the same time, you have to understand that markets are the way they are, and we could witness some corrections also in the markets, which we recently witnessed sharp corrections. So domestic institutions, they would like to stay invested and they would like to look at opportunities. But yes, you are right that in the current scenario, spotting opportunities is not easy as compared to maybe 6 months or 1 year prior. So that's a challenge that fund managers are definitely facing.
All right, and great point that you made there, sir. It could be a tactical positioning by FIIs instead of them really questioning the strength of the Indian economy. And it's the game of what's the cheapest, right? If China is available at a PE of 9.5 versus India, where we are trading at a PE of about 25, it makes all the more sense to, buy the market which is cheaper and sell the market, which is expensive. The markets and the run-up that they are on before the elections, we have turned jittery. We have seen some bit of correction in the market, and followed by 2 days, 3 days worth of pullback. But Amit, we often, in this conversation of what the market will do before the elections, during the elections, we often forget about what happens after the elections. What do you think are the challenges that the market and the government will face post-elections, June 4th, when the results come out?
Yeah, Suyash, like you rightly said, we have been talking about performances in the last 5 years, choppiness going up to the elections results. Looking at the crystal ball, and let's hope we can look at, on the 5th of June, there will be a new government and there will be a new sets of challenges. There will still be the oil prices, there will still be the Fed rate hikes that the world is looking towards. Bond inclusion will be a good thing that will happen to India. Market volatility, what will happen to that? Which are the sectors? Everybody looks towards infrastructure, but which are the sectors that will be in focus? Aamar, I'll put that question to you. What are the biggest challenges that the government may have to face on the 5th of June, whichever government takes oath? And which are the sectors that would be the primary focus in the markets?
Yeah, so if you look at, definitely markets have high expectations from the government, and also because now we are at a cusp of major transformation as far as India is concerned. Because if we look at our automobile sector, that's doing phenomenally well. If you look at our banking sector, that's left the past, I would say, history of NPAs that's behind, be it the private sector bank or the public sector bank. If you look at the power generation companies, if you look at the defense sector, and also FMCG to a certain extent, consumer goods. So many of these sectors are bound to grow significantly beyond our wildest of imaginations over the next 5 to 10 years. So it becomes very imperative and important that the government of the day is really looking at how to meet up to the expectations of the market participants. And also I would say that these are some sectors which one can definitely look at. Defense is a very promising sector. Power generation and renewable energy, again, very promising sector. Automobile, very promising sector. But at the same time, one needs to bear in mind that the sectors could be very promising, the companies could be very promising, but at what price are you willing to buy? Because ultimately, any investor who's putting in money, his or her objective is to generate returns. So at what level one is looking at to buy? Because the PE, if you look at many of the stocks, they are at significantly elevated levels as well. But expectations definitely would run high, and if the incumbent government comes back to power, I would say they'll have a tough job at their hand.
Tall task ahead for the new government that comes into power come June, but we'll shift focus to the primary markets because they are buzzing this morning. And as we speak, TBO Tech has made a stellar debut on Bourses, listing at rupees 1426 per share on both NSE and BSE versus the issue price of rupees 920 rupees per share. Now this is about 55% higher from what the market was expecting, and the listing gains are about 55% higher, and the market, I think, was factoring in a premium of about 45% to 55%. On the other hand, Aadhar Housing Finance listing has been a slumper. It has listed on a flattish note, I mean absolutely flat, zero premium at 315 rupees per share, and looking at the grey market premium and in the unlisted market, it suggested that the premium could be in the range of about 10 to 15%. Aamar, I'll come to you. Between the two, TBO Tech, Aadhar Housing Finance. TBO Tech, I mean, stellar listing in a market like this, which is choppy. Aadhar, no listing gains. Which of these two would you hold for the long or maybe medium term?
If you ask me, I really don't track these two stocks, so I really wouldn't be in a position to comment on.
All right, apart from Aadhar and TBO Tech, Go Digit, the initial public offering of Anushka Sharma backed and Virat Kohli backed Go Digit General Insurance has opened for subscription today. Now, the Bengaluru-based company in its DRHP, disclosed that it may not be able to maintain profitability in the near future, and this is because its loss reserves are based on estimates as to future claim liabilities, and if they prove inadequate, it could lead to further increase in reserves and thereby hit the profitability. However, this doesn't seem to be bothering bothering the markets. Go Digit's share are commanding a healthy premium of about 55 rupees in the unlisted market, indicating a potential upside of about 20%. Now, Aamar, I'll come to you. Any recommendation on Go Digit? Is this the one to subscribe, or will you give it a pass?
I would say that we'd rather wait for this, because we have to see how actually the company performs. So I would rather wait for this.
All right, would like to see how the company performs, maybe give it a pass at this point in time. Again, the listing, at least the premium, at least what the grey market is suggesting, they are expecting about a 18% upside over the IPO price. But we leave it at that. Aamar, Deo Singh, sir, thank you for joining us here on News 9. Always great insights from you.